So when we talk about these fallacies that keep popping up that underestimate the relevance of what is happening, this group that is forming, I think they are grossly underestimating the intelligence and the sophistication of these countries who understand exactly the pushback. And instead of making a common currency with a common central bank, everyone holds their own autonomy. But when it comes time to settling, if I got too many rupee or I have too many ruble, I want the common settlement token. Well, that's gold. And that's gold's role. And that's why the BIS reclassified it Tier 1. And that's why all the countries have been bringing it home, because it will be part of a new system. This is really important for people to understand.
In this detailed analysis, Andy Schectman breaks down the strategic maneuvers by countries traditionally viewed as adversaries of the U.S. as they aggressively accumulate gold. He discusses how these nations are navigating away from dollar dependence towards establishing a gold-backed common settlement currency, signifying a major pivot in global financial strategy aimed at enhancing economic sovereignty and stability. Schectman expertly connects these moves to broader implications for the U.S. dollar and international trade systems. As nations like China, India, and Saudi Arabia align their resources towards this new model, the potential reshaping of global economic dominance becomes evident. This shift not only challenges the current dominance of the dollar, but also redefines the fundamentals of global currency valuation and international economic policies.
These countries would need, of course, then they would need a central bank and presumably be held in China, which is an unacceptable loss of sovereignty, especially between countries like China and India with territorial conflicts. And well, you have the head of the BRICS New Development Bank who made it clear there are no immediate plans to create a common currency, which I agree. And even if they were willing to put aside their differences, it's hard to see what competitive advantage would ever have between to the current system. And then they talk about a gold-backed yuan or all. And they always go back to the euro-dollar system, and that we left the gold-backed system to go to the euro-dollar system because it was such a better system. And contrary to what people say, we had gone I think 180 years with no inflation and the greatest growth that the world has ever seen in a country by being on the gold-backed system. But I've been reading a lot of this lately, talking about this common fallacy is that there won't be a common currency, and maybe there won't be. And if you look at what they're proposing right now, it is not a common currency. They are proposing everyone having their own central bank digital currency, having their own monetary autonomy. That's number one. And if you look at the global GDP, and go 98% of all the gross domestic product of the world and the countries that represent that, every one of them has a CBDC in operation or development. That's number one. If you look at what's been done over the last year, all of these countries are trading in local currencies. They're trading rupee for ruble digital. They're trading yuan for oil. And that yuan is convertible into gold on the Shanghai Gold Exchange. And all of these local currency tradings that are being done instead of the dollar is first and foremost. Project Mbridge is a vehicle or a platform to allow these countries to seamlessly trade back and forth with one another without interference of the SWIFT system. No Western intermediary banks. The dollar is not compatible with Mbridge. And Saudi Arabia just became a full participant in Mbridge. And what they are attempting to do, at least that's what Dilma Rousseff said, the head of the BRICS New Development Bank, former president of Brazil, is that we've agreed in principle to a common settlement currency. It is not a common BRICS currency. This is where people are going astray. They don't have to have a common currency in order for this to work, but a common settlement currency that is pegged 40% to gold and 60% to BRICS plus currencies eliminates the need for a common currency. Each country will have their own system, their own CBDC, their own monetary system, their own little economy that they have to manage and do so in a prudent way. They will not be reliant upon having to go back and forth in and out of dollars to transact with other countries. And stand to the KYC and AML problems, the anti-money laundering and know your client, and the cost and the inefficiency and the time, when they can have a common settlement currency, which is addressed by having the gold held within this ecosystem. These unit tokens that they mint are held within the borders of the countries that possess it. They don't even have to send it to a central authority and have it independently and continuously audited. So when we talk about these fallacies that keep popping up that underestimate the relevance of what is happening, this group that is forming, I think they are grossly underestimating the intelligence and the sophistication of these countries who understand exactly the pushback. And instead of making a common currency with a common central bank, everyone holds their own autonomy. But when it comes time to settling, if I got too many rupee or I have too many ruble, I want the common settlement token. Well, that's gold. And that's gold's role. And that's why the BIS reclassified it tier 1. And that's why all the countries have been bringing it home, because it will be part of a new system. This is really important for people to understand. And I think it's a trend that's growing. It's literally accelerating. And you can see it in the price of gold. Well, one other thing I'd like to mention, a lot of people say, well, okay, fine. If all of these countries are accumulating gold, what does it mean for silver?
In this compelling update, Andy Schectman provides a deep dive into the dramatic shifts in the global silver market. He highlights how China, traditionally the second largest producer of silver, has transitioned from a net exporter to a net importer, signaling a strategic stockpiling that could reshape the silver market fundamentally. Schectman reveals insider information on how countries like China and India are not only stockpiling silver, but are doing so in a manner that avoids impacting market prices, purchasing unrefined silver directly from mines at prices well above Western rates. This secretive accumulation strategy, according to Schectman, sets the stage for a potential explosive revaluation of silver, making it one of the most undervalued assets globally.
And there are some very important things to understand about silver. Number one, first and foremost, China is the number 2 largest producer of silver in the world. And they, for many years, have been a net exporter because they mine all of these other metals. And if you remember, silver is largely a byproduct metal, where in North America, or I guess in all of the mining companies out there, only account for about 25–30% of the silver that comes to market. Most of it comes as a byproduct of mining other metals. So China and their smelters had tons of silver for years. They would export it. As of this year, they have now become shifted from net exporter to net importer. And it's been driven by increased imports and also by rebalancing their domestic market and not sending out all of this silver that they've been accumulating as a byproduct of other endeavors. And this, first and foremost, is really, really big. So the number 2 producer of silver in the world is now a net importer instead of a net exporter. And then all of the talk, I've done 2 interviews recently with mining executives, and both of them have said the same thing, that they are going around the world, China is, and in particular in Latin America, paying double what the West will pay for unrefined doré and silver concentrate, bringing it home and refining it there, and doing so that it doesn't come off of an exchange and affect the price. And so you have a massive drive by China and India. We know, we've documented all of their accumulation of silver to accumulate silver too. And China is going to great lengths to hide it in terms of how much they're producing and how much they're going around accumulating in unrefined forms, because it doesn't reflect in the price. Silver will have its day, and I think China is a perfect example of it. They do things thinking in terms of years and decades. We think in terms of minutes. But when one of the biggest exporters in the world goes to net import, and they're already the number 2 largest producer in the world, it should tell you where silver ultimately will go. It's not tier 1, but it's strategic. It is not an industrial metal as we are led to believe. It's a strategic metal, and it is needed. And the countries of the global south are understanding that. And this is why they're draining the LBMA to the second lowest level they've ever had in the history of the exchange, 140 years. This is why they're draining the COMEX. This is why the others stand for delivery. We've talked about this for years, and they have been doing it very methodically and very opaque in their manner, not transparent. And I think it's accelerating. So silver will have its day, and everything that we've ever talked about silver I think will happen in spades. It'll just happen in a manner. It will go from 0 to 100 just like that. We'll wake up and see it repriced or to a whole different level when there just isn't the ability to accumulate it on the exchanges, which are being bled dry. And at some point, all of the people who have silver that would otherwise sell it, they're not going to sell it at the Western price. It will be sold at a price far higher, and probably a price that is then revalued or controlled by countries like China, who, as it is right now, are selling it for $4 an ounce higher in Shanghai. What if it was $40 or $400? It's the same thing as us talking about revaluing gold, where Senator Loomis for Wyoming can say, yeah, I like Trump's idea of the strategic Bitcoin account. We should do that and fund it partially by revaluing our gold that's held by the Fed. Well, there you go. I mean, it's one thing for the Dutch National Banker, the head of the Dutch National Bank, to say, yeah, we're going to revalue gold because it's in the gold revaluation account and it should go much higher to offset our liabilities. But when you see Senator Loomis from Wyoming saying, yeah, we should do this to fund a strategic Bitcoin account, what's the difference if the West revalues it or China revalues it? In essence, a $4 premium to the Western price already is the beginning of a revaluation. So I would say silver is still the most undervalued, probably best potential asset on the planet, regardless of how maddening it has been for the past few years in terms of its counterintuitive price movement and its volatility. If there weren't, and I'll keep going back to the chart Ed Steer put on your show, it's incredible. People understand that there are 8 banks that are holding the largest concentrated position of any commodity ever traded on COMEX in silver. Why? And it's because those 8 banks are being instructed by the people above in the West to keep it down for a reason. And maybe it is to fund the military-industrial complex. Who knows? Point of it is that all manipulations end badly, especially when you see massive efforts by countries like China and India to accumulate everything that's not nailed down, and even do so in a clandestine manner by buying doré and concentrate from the miners that doesn't come off of an exchange, that isn't reflected in the price, so that they can have a strategic advantage that no one sees coming.